Hello and welcome to CNBC TV18's Mumbai newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Joining us today are two experts, Ruchit Jain of 5paisa.com and Astha Jain of Securities. They'll be answering all our stock queries. So good afternoon to both of you. The first query comes in from Chennai, and with us on the line we have T.S. Narayan Swamy. Hi sir, good afternoon. How can we help you?
Yes, sir. Yes, I have purchased the Lal Patch at 800 rupees. It has gone up to 4,500, but now day by day it is coming down. So what I have to do? Whether I have to hold or change it to some other.
Sir, are you in need of funds? Do you need this money, the profit that you're making, or can you allow it to remain invested?
And I don't want any money, but since it is coming down, I would like to change it, that one.
Fair enough. Okay. Astha, let me come to you first on this. For Dr. Lal Path Labs, what is the outlook for diagnostic labs, Dr. Lal in particular, and what is your recommendation for a caller?
Hi Sumaira, good afternoon. First of all, if I talk about this company, I would like to bifurcate into the micro and the macro segments. So first of all, if I look at the macro environment right now, diagnostic companies are not looking that great because, due to the COVID, they have got a surge in the volume, which is now looking not a great opportunity for them. Secondly, if I talk about, and going ahead, if I talk about this company as a whole, in this company also, I think the margin will be a key concern going ahead because we have seen a significant rise in their marketing expenses as well as digitalization cost. So overall, I think the future prospects of Dr. Lal Path Lab is not looking that strong in the near future. So my idea is that if he has a longer term horizon, then he can hold the stock. Otherwise, in the near future, we can see some sort of volatility. So he should be prepared for that.
Okay, Ruchit, what would you advise Mr. Narayan Swamy in terms of where the stock could be headed?
Yeah, so if you look at the most of the diagnostic stocks, then they have seen very sharp price correction of late, and even from the lower levels, although the prices have seen a bit pullback move, but the volumes are not that high that it would indicate any kind of outperformance going ahead. So I think if he wants to make a shift, he's into a good profit. So I think still at current levels, he can look to book out some profits and shift to some large cap pharma names such as Sun Pharma, where I think over mid to long term perspective, he can witness a good outperformance and compared to Dr. Lal Path Lab. So although it's not from the diagnostic space, but within the pharma space, he can choose to shift from Lal Path Labs to Sun Pharma.
Okay, Mr. Narayan Swamy, I hope that advice works for you. You have a lot to chew on. Next up, we have Ashish Gupta writing to us from Pune. He has 1,000 shares of Dishman Carbogen at 200 and 330 shares of Jubilant Ingrevia at 612. He's making losses in both, so he wants to know, should he remain invested or book his losses? Ruchit?
So I think Dishman Carbo, the trends for the stock continues to remain negative, and we have seen that in last couple of months, although market have seen a good pullback move, the mid caps and the small caps have moved higher, but there has been no participation in this stock, and in fact, any pullback moves were also led by very lower volume. So I think this stock could see some further price-wise correction. So it's better to book out the losses and get out from the stock. So Dishman Decal would be an exit at current levels. Jubilant Ingrevia would be a hold. Rather, I think from mid to long term perspective, if any declines come, we can again keep a buy and dip strategy and look to average out if we get the stock around that 450, 460 mark in the near future. So broadly, we have already seen some price-wise correction. Now the stock is going through a time-wise correction and the volumes have started improving along with the price up move in this time-wise correction now. So I think going ahead from mid to long-term perspective, the stock has potential to rally again towards that 620, 650 mark. So certainly hold on to your existing positions, and if you get more dips around that 440, 450 mark, then that could be a good opportunity to average out at that range.
Okay. Astha, I don't think you covered Dishman Carbogen, but what about Jubilant? What would you recommend?
So here, Sumaira, even I would like to say for Jubilant Ingrevia, he can hold the position for the potential price target of 560 to 610. Now, why we are so much positive about this company? Because what I can see is their capex is really very strong, whatever capex they are doing. And in fact, they have already announced 900 crore capex in their Q4. And addition also, they are announcing more capex. So now they are transitioning from a commodity segment to a specialty chemical segment. And 60% of of this capex will be attributed to that segment only, and that segment is really very margin accretive if I talk about the EBITDA margin as a whole. So all in all, I think with this capex and with the transitioning toward the specialty chemical segment, we are expecting very strong sales going ahead. I mean, the sales can be as strong as double of what they have clocked in FY22. So it will take some time. So in the longer term, Jubilant Ingrevia is looking good, but initial price targets can be 560 to 610 odd levels. So he can remain invested in this stock.
Okay. The next query comes to us from Bengaluru, and we have with us on the line Mr. Radhakrishnan G. Hi, sir. Good afternoon. I believe you have investment in SBI.
Yes.
Go ahead, sir.
Yes. Hello.
Yes, Mr. Radhakrishnan, go ahead, sir. What's your question?
Yeah. Sir, I am holding 550 shares of State Bank of India. Whether I can hold it or I can sell it.
Okay, and you had bought it for the long term. Why are you looking to sell
around I am 30 years back, madam. I bought it for 10 rupees. At the time it was 100 rupees, then it was split into 10 rupees.
So why are you looking to sell it now?
No. Just I am seeking the opinion. I don't want to sell it actually. Now it is picking up. I think 557 is there. I think today or yesterday.
Yes.
So I would like to have opinion. That's all.
Okay, so you're making more than 2.5 lakhs in profit right now.
Yeah.
Astha, should he remain invested? Things are looking good for banks. Would SBI continue its leadership? And for somebody like Mr. Radhakrishnan, who's bought it 30 years back, what should he do?
If I talk about fundamentals are looking very strong for this bank. First of all, it is the leader in the PSU banking space, and most important thing for any bank is their slippages, their NPS GNPA ratio, which or the asset quality. So they are showing continuous improvement in their asset quality. Another important thing for any bank is the credit growth. So the credit growth outlook is also very strong for this bank. So my idea is that, and now even on technical charts, when something is crossing its all-time high, then again it makes a case for remain invested because more or a larger numbers can be seen. So I think overall fundamentals are looking strong for this bank. So for the price target of 620 to 650, he should remain invested in the stock.
Okay, Ruchit?
Well, I have a similar advice to continue to hold on to the stock. He has already been holding from such a long time. So rather than just looking at the day-to-day price movement, I think until you need that money for some purpose, it's better to hold this outperformer stock. Even if you look at the entire banking basket, then last few months from the lows when the bank nifty has moved up, two stocks from the large cap banking space. One is ICICI Bank from the private sector and SBI from the PSU banks have done relatively quite well compared to others. So there is no change in the trend. So my advice would be to continue to hold on and ride this trend from a mid to long term perspective.
Okay. So Mr. Radhakrishnan, you've got a good thing going. Keep it going. Thanks very much for calling in. Up next, we have a query from Mr. Venugopal Rao Karnam, who has written in from Andhra Pradesh. He has 1,000 shares of Escorts Kubota at 500 and wants to know, should he remain invested, book profits or exit? So it's very, very heartening to see that there are so many people calling in and writing in who are making extraordinary profits right now. Ruchit, same advice here, remain invested?
Yes, similar advice to remain invested. In fact, the auto pack entirely has done quite well in last few months, and Escort specifically after that price-wise correction post that deal in the month of April, we have already seen that corrective phase is over for the stock. And now high top, high bottom structure, whether you take mid to long term charts, the weekly chart, monthly star charts, all are positive. So only thing I think you can do is keep some stop losses on your existing positions. From a medium term perspective, 1850 now is a good support for the stock. So till the stock is above that, continue to hold on to your positions, and 1850 could be kept as a stop loss on your positions.
Astha, what's the fundamental view on the company?
Talking about Escorts Kubota, first of all, the recommendation is to hold. Price target can be 2280 or 2300 levels. Positive on this company on the back of strong agri demand outlook. Secondly, the monsoons are, okay this time, though I think again it will create the demand. Thirdly, I think the company has seen some sort of margin pressures, but going ahead, maybe from third quarter onwards or second quarter onwards of FY23, we can see some rise in the margins, because company has taken the price hike, as well as we all are witnessing the falling commodity prices. So again, there will be fall in the input cost and rise in the price. So all in all, I think future outlook is looking strong for this company, and that's why my stances hold the stock. Price target can be 2280 to 2300 odd levels.
Hi, welcome back. You're watching Your Stocks. Our two experts, Ruchit Jain of 5paisa.com and Astha Jain of Securities, are with us to answer all our stock queries. And we have a query coming in from Hyderabad. Meenakshi Murlidhar has written in to us. She has 120 shares of Varun Beverages at 890, 300 shares of Nalco at 100 and 200 shares of EIH Hotel at 183. Now, she wants to know how her portfolio looks to be stacked up and whether there are any changes which are recommended. Ruchit, first to you.
So I think Varun Beverages has seen a good outperformance of late, and this outperformance could continue going ahead. Only thing is that in short to medium term, some time-wise corrections could be there, but overall the structure still remains quite good. So continue to hold on Varun Beverages. Even Nalco could be held on, with the stock has already seen some good price-wise correction recently, and these are not the levels to exit the stock. In fact, a pullback move could be seen in next few weeks in Nalco as well. But only within the hotel space, I think Indian hotels should be more preferred compared to EIH. So here, if she wants to make a change, the EIH Hotels has also seen a good up move of late, so they can use this opportunity to book profits or exit from the positions, and rather prefer Indian hotels, which could deliver better returns.
Okay, Astha, how would you rate the portfolio and any changes?
I think he can hold all the three stock. First of all, for Varun Beverages, it is looking very much strong, fundamentally because they are expanding their distribution network, which is important for any FMCG company. Secondly, I mean, they are now focusing on the right product mix. In fact, they are going into the dairy segment also. So I think all these things are looking very strong for this company fundamentally. And in fact, they have planned some capex of around 1200 crore, and they are expanding their facilities also now in the Bihar, in fact in Andhra Pradesh, Rajasthan, etc. So I think future outlook is looking very strong for this company. So no problem with this company. 1200 can be attributed as an initial target. Talking about Nalco, Nalco is looking okay to me because they have posted very strong set of numbers in the quarter gone by. So I think again this stock can show some sort of rise. So if he want, he can book profit at the higher levels of around 95 or 100. So this is for Nalco. And talking about EIH Hotel, I think there is some steam left for this company right now also, so he can stay invested for the price target of around 200 to 230, because this is the flagship company of the Oberoi Group and they have a strong room inventory of around 4500 room. They are managing 33 hotels, and right now they are now venturing into the premium cafe business also. So I think, and even the margins are looking very strong. So overall, in fact, I think EIH Hotel can be a stock in which he can stay invested and book profit at the upper side of around 200 to 230 levels.
Okay. The next query is, in fact, we're connected to our next caller. Raghavendra Rao called us from Hyderabad. Mr. Rao, good afternoon. I believe you want to make some investments. What have you shortlisted in terms of stocks? Tell us, what's your question?
Madam, I would like to buy the Oriental Hotels and Parimal Enterprises, madam. I want to add my portfolio. Okay. Can I go for this current rate?
And Amy, what is the reason you have shortlisted these two stocks?
Because the hospitality, this one is now increasing, that is why I'm doing.
Okay, fair enough. Astha?
So talking about Oriental Hotel, I think yes, he can look for investment in this stock. See, there are various positive factors which are working very strongly for this company. First of all, EBITDA margin of 30%, which is very strong if I look at the other hotels counters or the hotel stock. Secondly, their average room rate has shown a very sharp rise. In fact, the occupancy levels have grown at its highest level and they have posted the highest ever profitable quarter, the quarter gone by. So I think all these things are signaling a strong future outlook for the stock, and he, if he want, he can invest in the stock. But talking about Piramal Enterprises, I'm not very much convinced about the stock at the present moment of a time, because now the demerger has already been started for this company. So we will be looking after the listing of the Piramal Pharma also. Now this financial arm is with the company, which I need to really look upon how this will work going ahead. So for Piramal Enterprises, he can wait or but for the Oriental Hotel, I think he can make some sort of investments.
Okay, Ruchit?
So I think yes, EIH hotels, Oriental hotels can be bought at current levels, but gradual buying should be done as we have already seen a good price rise up move recently. But in today's trading session, again, there have been good volumes, which indicates that the broader trend for the stock continues to remain on the positive side. So can buy Oriental hotels at current levels, no, maybe 40 to 50% of the whatever amount, whatever value wants to buy could be invested at current levels. And if you get any dip again towards that support of 66 or 64 range, that should be used as a opportunity to add more positions to that. And Pyramid Enterprise would be avoid from my side too, because the chart structure is not much positive as of now. In case if we see good volumes coming in along with the price up move in the near future, then you can take a decision whether to invest or not in PEL.
Okay. Up next, S.B. Sainath writes to us from Visakhapatnam. He has 300 shares of Gateway Industry Parks at 67 and 200 shares of Zensar Technologies at 252. He's making losses in Zensar, so now wants to know should he remain invested there or look at some other stocks as well. Ruchit?
So Zensar would be an exit from my side because we have seen that within the mid-cap IT space, the stock has seen a good underperformance of late, and there are no signs of any price up move supported by good volume. So already yes, price correction has been done, but even if you get a up move in the IT space going ahead after a few months, then I think within the mid-cap IT basket, KPIT Technologies could be a stock which should show some good outperformance compared to Zensar. So you can make a shift from Zensar to KPIT Technologies within the IT basket. And GDL on the charts is showing more of a time-wise correction where the entire consolidation was seen. But I think this stock, I'm not sure whether this has been delisted also. So I'm not sure about GDL, but yes, as far as Zensar was concerned, so Zensar can be exited and KPIT should be preferred.
Astha?
For Zensar, even my view is same because we are expecting that this company will take some price hike going ahead also. So again, it will put margin pressure. Already we have seen margin pressure on all the IT stocks, and this stock can show some more pressure on the margin. So not looking so strong in the near term. So avoid is a strategy from my side also. But talking about GDL, I think this is looking good. 88 or 90 level for the targets of 88 or 90, he can stay invested in the stock because we all know it is into the logistics space, and with the rail comprises 70% of the revenue. Now they have upgraded their capex guidance also, and with this dedicated freight corridor, I think there will be a lower turnaround time for this company. So all is looking good for this stock. For GDL, it is hold. Price target can be 88 to 90 levels.
Okay, by the way, the Nifty has turned positive. What a day it's turning out to be. Finally in the green right now for the Nifty and Sensex, and just minor losses on the mid-cap index. We have a final query coming in from Pune. Mr. Narendra Singh is on the line with us. Mr. Singh, go ahead, sir.
Hi, Sumaira. Sincere thanks for taking my query. I'm a long-term investor with a horizon of 3 years plus. I have a two-part query. The first part is I'm holding 500 shares of Sirma SGS at 300 rupees. Should I continue to hold, add or sell? And the second part, I would like to buy 500 more shares of any one of the following: Dixon or Endurance or Amber. Kindly advise which one I should buy and at what price.
Fair enough. Astha, this was right up your alley. What would you recommend?
For Sirma SGS, I think he should stay invested. It has come out with the IPO, and there is one positive for this company which makes it separated from Dixon or Amber. Their EBITDA margins are very strong. I mean, why their EBITDA margins are strong? Because they are not into the mobile manufacturing, which is a high volume but low margin business. And another point for this company, which is positive, is that they have acquired SGS Techniques and One Perfect ID recently. And with these acquisitions, their hold in the domestic market will be more stronger. So although it is a IPO, but I think 380 or 385 can be attributed as a price target for this company. And I want to make one disclaimer also that we might have this stock in our portfolio also because we run PMS services. But yes, Sirma SGS, he can stay invested. Price target is 385. Time horizon can be 3 to 6 months. Talking about the other three counters, I think Dixon is looking good after Sirma. So he can also think about Dixon Technology, but Sirma is my first choice.
Okay. Thanks very much, Astha and Ruchit, for joining in. and for advising our viewers. With that, we're going to wind up on the show for now. Thanks very much for watching, but do stay tuned in. The team of Closing Bell joins you next.